All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. It is time to start. It's actually time to get our analysis going for all the majors. So let me grab my my bias chart. Give me 1 second, and okay. And we're going to start with the euro dollar. So in case you missed it, I have, excuse me, closed my euro dollar short. And by the way, let's just there are actually a couple things that I want to mention. If you guys here, let me pull up over here. This dollar index last night, we broke this downtrend line in the Wise Trade chat rooms. We were talking about the steep downtrend line that the dollar index was about ready to break. We were talking about it in late in the day yesterday, so probably right around here. Yesterday afternoon, early Asia, we started to break out, and I do a lot of my Forex analytics works. You guys know. The team that I'm involved with Forex Analytics here, okay, I do a lot of my work in the evening. Why? Well, because I work Wise Trade stuff during the day, so I'm doing webinars here and I'm in our chat rooms and stuff. So I do a lot of the analysis in the evenings. So I do a lot of basically all the Asian analysis. Most of it is I don't want to say most of it, but actually a lot of it is mine. But last night, if you guys were following, even on Twitter, because I actually posted on Twitter too, we had the breakout right here on the dollar index. Okay, that little breakout in the dollar index was posted last night, and then I tweeted it from the Forex Analytics Twitter handle. So if you guys don't follow us on Twitter, you should. But that break right here to the upside, I knew that at that point in time, I knew that I would at least be able to get out of my euro dollar for a flat. And being short the euro dollar, my cost average is like at 48 or something, and I just put it out at break even, my limit at break even, like right where we're currently at. I did exit my my euro dollar. I did exit my euro dollar short, so I'm not short the euro. I'm still short the Aussie, and I'm sitting in that still. But my euro dollar I'm out of right now. Now, if you guys don't know why we stopped where we stopped yesterday, this is actually a very clean analysis right here. It's very, very basic, clean analysis that we can see. All right, we had a 786 retracement. I'm going to delete this after I'm done showing you. 786 retracement, 127% extension. And that stopped us, okay? We created an hourly double top, broke lower, and completed the double top. Here, we completed the double top right there, okay? So now you got to ask yourself, okay, well, are we done? Are we finished here? Because I'll tell you, and I probably just need to go from the very low here. That's a 38% retracement on the euro dollar. That means, here, let's get rid of this. That means that this is very important support. Extremely important support. What that means is if that level breaks the low, we are going much lower. I say much lower, probably going down towards 111. So, and we had a bout of volatility this week. Thank God. I mean, I say thank God, but it actually worked against me. we had some volatility this week in the dollar. and it did work against me since I started buying the dollar as it was falling, and I bought it a little early, obviously. Um, but I'll tell you, we have to take what we can get. So in this scenario, if we break this 111.35, that, in my opinion, opens the door to 111. Okay? So now, if you're like, well, I want to buy the dollar or I want to buy the euro because I think the dollar is going to go down, you're like, you were listening to Paulie's analysis and you're like, I just don't agree with Paulie, which is fine. Look, bulls and bears make money. Pigs get slaughtered. One of the most legendary traders that I know, him and I talk like, on a daily basis, and he laughs at me because he's like, Blake, you're always bullish the dollar. And I'm like, yeah, in recent years I am. 3 years ago it really wasn't the case. 3 years ago or 4 years ago I was, pretty bearish the dollar. But, in recent years, the last couple of years I've been, I predominantly just try to buy the dollar when it dips. And it's worked, very well, as we've come down from the 150 level. It's worked really well just being short the euro or long the dollar, and so I continue to do that until I have a reason to believe that the monetary policy is actually going in the other direction. However, the point I'm trying to make here is when I was talking to him, he's like even you're always bullish the dollar, and I'm like, yeah, I just try to buy it on dips. And he's like, the good news is if it goes up or down, whenever the market goes up or down, it's going up and down. You can make money in either direction. You could be bullish the dollar and I could be bearish, or I could be bullish and you could be bearish. We can still both make money. It just depends on how you time your entry. I think that the path of least resistance for the euro is still down. That means the path of least resistance for the dollar is still higher. So it tends to be a little bit easier for me to make money when I play the dollar long side, because the path of least resistance is down. So it's just easier, when the euro falls, it just tends to fall a little bit more quicker than it does go up. So now that wasn't necessarily the case this week, but for the most part it is. So if you're a euro bull and you are a dollar bear, then why don't you wait for this the stops to get triggered here, then get long at the 618. That to me makes more sense rather than trying to buy here. Now you can also buy the euro right now and just put your stops below 111.30. You can do that. You can risk 15 pips right now. That is a trade. I don't agree with it, but that's a trade. All right. So right now support is at 111.35 and 111. So I want to say 111.35. Okay. There, I'm going to put 2 zeros in there. That's where the two support levels are today. Resistance. Now, if given the opportunity to short the euro back here at 111.60 something or other, that's the double top neckline. It'll be right back here. It's actually at 111.60. I mean, that might not even be a bad area to be on the short side of the euro. I personally, I'd rather just be short up here if I can get it. I don't even know if I want to touch the euro at the moment, frankly. Okay. 112. I can write down 111.65. 112. Okay. To give you a couple areas to play from, I still think it's bearish, and I'm going to stick with this analysis as long as we are below 112. Well, now it's 112.50. It was like a couple weeks ago below 112. Now it's 112.50. As long as we stay below this yellow line, it's bearish, plain and simple. We do have this trend line that's coming into play, and it might actually come into play before we turn lower. You know how Polly was saying that I expect the euro to rally in September. I could agree with that. I can totally get on board with that analysis. I, however, think that um, we might be able to, over the course of the next week or two, we might be able to bounce around here and do one more surge to 112.50 and then reverse. Okay, maybe over the course of the next couple of weeks. I may be wrong too. We just may crap the bed from here. You know, who knows? But I am looking to this blue line. Whenever that blue line comes into play, I'll be in it. I'll be in it to win it. I'm all over short in the euro on moves above 112 now. All about it. Give it to me. Bring it. Come to me, baby. Feel my seductive voice. Come euro to 112, 112.50. You'll be happy. So I can then short the living something out of you. That's right. That's right, baby. 112. Give it to me. All right, all right, all right. Come on, I gotta have fun. It is, it is 4:45 in the morning. Benedict said, or no, Andrew said, you should be a sex phone operator after hours. Do you like that? What are you guys wearing? Are you wearing pink polka dot boxers right now? Now, how many of you are grossed out? Somebody just puked. Okay. Kevin says that was scary. Sam said I had to take my headphones off. I'm sorry. 4:45 in the morning, I can make myself laugh like that. I'm hoping you guys are laughing because, woo, man. Okay, all right, all right, all right. Back to business. Woo. See, hey, where else can you go get FX analysis and then get phone talk like that? I mean, you can't get it anywhere else. I mean, you can't even pay for this stuff. You can't. All right, cable. So let me stop here and let me delete everything. I know you love it when I do that, but let's delete everything. Okay, so I don't know what to do with the cable here, and just so you know, I'm long some pound Aussie right now. So it's not like I'm a pound bear at the moment, but I'm a little nervous about the cable at the moment. Okay, now this is a Gartley pattern, as I just had it drawn out there, but I'll draw it again. That's 127% extension. Hold on, wait, I got to keep it right here so I can keep it wide enough to show you everything. All right, low to high. There's a 786. This is a Gartley, guys. This right here should be a 78% retracement. I mean, this is about as Gartley as they come. So look, if you guys want to buy the cable, you buy it right now. Okay. Are we getting some volatility right now? Wow, look at the Aussie New Zealand's ripping up. Kiwis coming under some pressure. I like it. I like it a lot. Okay, so we should bounce like right now. I mean, I'm tempted to go long the pound, but I just don't have it in me. I just don't. I don't have it in me. But I'm gonna write down 129.40. Right. If you want to go long the pound right now, I just those house price the house price index last night came in just horrible. I mean, this maybe I sound like Captain Obvious right now. I mean, correct me if I'm wrong. And you guys live in the UK, so or there's not you guys, all you guys, but a lot of you guys live in the UK. Look, I'm no brain surgeon, nor am I a rocket scientist. Hell, I'm not even a physicist or oceanographer or anything. I'm just a lowly old trader. But I don't think it takes somebody too terribly smart to figure out that house prices are probably going to come down fairly aggressively in the UK. You know what I'm saying? I mean, if you live in the UK, you're going through a Brexit more than likely over the next couple of years, right? UK house prices are frothy. I was just talking to okay, the one of the analysts here. Here, I'll just tell you a quick story. Um, uh, 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 this guy right here, Steve Vulgaris, right in Athens. His best friend is an analyst over at in London. Who he's an analyst in London. Okay, and he does really well. It's like his best friend, like they grew up together or whatever. And he was just telling me this scary story because he bought like this flat. I don't know, it was like 700 pounds or whatever, 100,000 pounds. I mean, it was a nice flat in London. He apparently, because he has a great job, he got some crazy financing deal. Like, don't quote me on this, but it was like it was crazy. Like, he didn't have to put any money down. He just has to pay interest, blah blah, because he has a good job that he's had for like 10 years. And he got some crazy financing deal. I'm like, wait a second. So it's like, and he basically just got approved because he's just got a great paying job. But it's like, I don't know, and I didn't have time to really listen to understand the ins and outs of it. But like I said, I know that the UK housing market is frothy. I already know that. And I think that because the UK is going to go through a Brexit, or at least the process of whether it actually happens or not is to be seen. Like I said, I don't think it takes a rocket scientist to figure out that house prices are going to come under some pressure. And that housing data that came in today was pretty worrisome. Now that doesn't mean that it's going to affect the pound right now. That has nothing to do with where we're at today. I mean, the pound we could spend the next month and a half just bouncing around between 130 and 140. I mean, or 125 and 135. I just think that there are some structural issues that are going to have to be handled in the UK. So I'd rather be on the short side of the pound rather than the long side of the pound, me personally. Okay, and I'm long pound Aussie right now, so that's 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 how uncomfortable I feel about it. But okay, but I will say that that the cable is on support. So if you want to buy it just from a trading perspective, it doesn't mean you have to marry the trade. It doesn't mean you have to buy the pound and stay in it for the next 3 years. Um, um, uh, but anyway, and Alan says, Blake, our housing market is frothy as well. Oh God, yes, ours is. Yeah, I mean, unless you're going to be buying, wherever you live, you're going to be buying a house that you're going to be staying in for the next 30 years. Yeah, I think housing prices are frothy. You definitely don't want to be an investor at current levels. Are you kidding me? Arizona real estate prices have regained about 80% from the highs or so, I would say, roughly. That's crazy. From the housing crisis highs, like from the lows. I mean, from the highs to the lows. We've regained like 80, almost, maybe even a little bit more. As soon as rates go up, guys, as soon as rates go up in the U.S. and they look like they're gonna start to normalize, prices are gonna come down. Rates will go up. Mortgage payments will all stay the same because they have to go up to meet demand. Or excuse me, prices have to come down to meet demand, because if people are qualifying for loans, they're going to qualify for loans that are, paying a lot, that are just a lot more. Anyway, we can get in a big housing discussion. I'm not going to do that right now because we are talking about the pound. But anyway, cable 131 is resistance. Intraday, I get off on a tangent here, so I don't want to. Actually, 130 and a quarter is intraday resistance, right? That's big time. 130.25. We really have to break that to get that downside pressure off to intraday. But you guys know, as long as we're below 135, it's bearish in general. Let's go over to the Swissy. God, I just realized I just used up a lot of time for no reason. I got out of the Swissy yesterday for a break even. Just so you all know, I bought it at 62. I sold it at like 61 or something. I just basically got in and out of it. Swissy's under a little bit of pressure here. It's under a wee bit of pressure. What is that? Let's delete this. Okay, we're holding the 50% retracement. The 618 comes in at 97.13. If I'm going to buy this bad boy, I think that would be the price to do it. But you have to imagine that if stocks come under a little bit of pressure, which they are starting to roll over a little bit this morning, just since I've been sitting here, we could come down here. I'm going to write down 97.10 as support. Not great support, but it's support. Resistance. I think that clearly this is pretty good resistance here. No, there we go. Let me remove that. Let me grab horizontal line here. What is that? 97.90. Okay, we're in a range. Well, I'll do the yen really quick. Let's get over to the yen. So, as you guys probably remember from yesterday, the yen this is really, you can just delete all the rest of this crap. I mean, let's just get rid of all this. Who needs it? All right, I think really what's very important right now. I don't think there's any if or and buts about it. If we break through 101, this dollar yen is we'll probably break new lows if we break through 101. Okay. I mean, that's all there is to it. I don't think there's any other way to look at it. 101. That's right, folks. If it breaks below 101, it'll be massive, huge, large. Somebody asked, will I short the dollar yen below 101? I don't know if I'd short the dollar yen. I might look for other things to do. Like I might short the Aussie yen or New Zealand yen or something like that. That might be more interesting to me. I guess the flip side to that is, hey, if we break above this 101, what is that, 101.55? We break above 101.55. Maybe that'll give us a little bit of a squeeze. It's possible. It is still bearish. We're in a severe downtrend. And so, you know, this break below here is just going to expose, you know, probably the lower end of this channel, I'm assuming, down here. Okay. All right, ladies and gentlemen, I'll be back very shortly. Stay in the hot seat. I'll be right back. All right, ladies and gentlemen, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. I know you were excited for me to talk dirty too, but I can't do that right now. We got things to do. We got places to see, people to do. We got other things that we got other things we got to tackle here. Dollar Canadian. Let's get over to it. Okay. So here's the CAD. You know, the CAD, as Paul pointed out, and I didn't realize actually it sold off so aggressively when Paul was on earlier. But you know, I'm long the Euro Canadian, so it did come under a little bit of pressure. You know, and so I was like, huh. But I guess that was the Canadian. You can see that big reversal here when Paul was on, and then you know, right over here, then we've kind of bounced back, and we're very choppy here in the Canadian. But I think that in my opinion, the boundaries are really clear. Okay, yeah, and you know, Paul pointed out it's, you know, 130 and 130.80, and I think you just have to look for, you know, a break above or below. You know, obviously a break below would be very bearish. Oh, watch out, crude's under pressure right now, just FYI. So that might push up the dollar Canadian. Right here, okay, above 130.80 or below 130, and those are your boundaries right now. And I think you got to either trade the range or wait for a break of the range. Pretty easy, you know. I don't think there's any, you know, I don't think there's any, you know, special, you know, analysis other than just wait for a breakout or trade the range. You know, you just trade inside of the range, or you wait for a break of the range. Okay, so I'll write down 130.85 and 130, or you know, it's 129.90 actually, 29.90. That's mega support, by the way, just so you know. 130.85 is resistance, and we're in a range. Okay. All right, let's take a look at the Kiwi. So, of course, the RBNZ lowers rates. Dipstick Wheeler. I'm telling you guys, you know, I'm not a big central bank hater. You know, you know, I'm not a guy that's going to talk smack about central bank governors. I think they do, generally speaking, do a very good job managing. They, you know, they have some tough jobs. Wheeler, on the other hand, he's a jack off. You know, actually, let me take that back. He's a jackass. He really is. The guy really does not know how to manage expectations at all. Zero. Zilch. Okay, really not good. And I mean, I've been watching Wheeler since he took the helm of the RBNZ, and he is really just poor. They are very reactive. I mean, yeah, it's just, if he would have managed expectations correctly, the Kiwi would not be up here. His biggest issue right now is the Kiwi is so strong. Well, the Kiwi is so strong because you have made it that way. He doesn't understand that his words actually matter. And you know, and so when he, you know, sets expectations a certain way, that's why the Kiwi was rallying into this week. Everybody's like, oh, they're going to cut rates. Well, if they're going to cut rates and it hasn't been going down, then that means it's just going to go up. So we're going to get the knee-jerk reaction higher. Everybody knew it was coming. We knew it was coming. I was questioning if that was going to be the outcome, but we knew it's like, hey, if we get the knee-jerk reaction higher, let's just short it. I guess the good news is it's easy to trade in that sense, because I know a lot of you guys shorted the Kiwi above 73 cents, and I should have. I didn't, but I should have. Instead, I bought the Aussie New Zealand, below 105.75. But I guess being able to read him is it makes it easier than not being able to read him, I guess. But he is just really just manages expectations very poorly. Now, the good news is for the Kiwi, where it stopped, we know what our we know here what is do or die for the Kiwi, because now if the Kiwi hits new lows, which is only 25 pips away, okay, we basically, you can say we filled those gaps. If we break the 72.25, it's going to get hit, which is good. I'm hoping it does. Okay. Now, I know some of you are probably hoping, well, I hope it rallies back to 73 cents so I can short it up there. I don't think that's a bad idea either. If we get up to 73 cents, I might short some Kiwi, because I didn't do it last night. Because I just didn't want to overexpose myself when we were up there last night, just because I just didn't want to be short Kiwi all over the place. I was thinking about buying the pound New Zealand. I didn't do that. There's a lot of things I was thinking about doing. I just didn't do it. All right. 73 cents. Remember, 127% extension we marked down yesterday. There's a bunch of spike highs up here. If it gets anywhere near 73 cents, you can just thank the Forex gods that we made our way up there. All right. Aussie. I am short. I'm short. I'm down 3 pips. 4 pips. I don't have to go in the big long conversation that I had with you guys yesterday. Look, from a risk-reward perspective, it makes sense to be short here. Plain and simple. We get above 70, and by the way, Nick Trades brought this up to my attention too. Just like we talked about it yesterday, she goes, "This is the double-headed inverse head and shoulder pattern, double-headed." Okay, it is. If we break, I will tell you this, guys. If we break above 77.50 or 77.60, something like that, we break above that and we stay above it, the Aussie dollar is going so much higher. I'll drop everything and buy Aussies, pretty much. But it's the very obvious trade too. I know it's the very obvious trade. I'm looking at it more like a pennant with a strong downsloping trend line that actually is going to be a continuation pattern lower. That's why I'm shorting it now. Serenity now! All right. 77.55 is resistance. $60. Mega resistance. We are at the top end of our range. 76.75. If that breaks, the downtrend starts, in my opinion. Okay? Dollar index. Mega support. 95.45. key support. It's trend line support. That's an hourly. We can go out to a 4-hour. Trend line support, spike low support, fib support, probably. $618 fib support, just big support. Any which way you slice it. Resistance. $95.90. If we can break the highs of the day, that should continuous. Crap. Hold on. If we can break 95.90, that'll squeeze us. Squeeze me. 95.90. Okay. We're in a range. Let's take a look at the peso. I bought the peso this morning, by the way. The peso, I bought it at 36. Actually, my cost average is 1837.50. So I bought it just down here. We have an inverted head and shoulder pattern developing. Thank you, Matt, in our chat room. And Ron. We call him 2/10 Ron. He plagiarized and saw it as well. But we have Ron right now might be banging his head up against his monitor. If I'm envisioning what it looks like right now over at Ron's house. 1846, 1840. I'm going to say 1849, just to be sure. 1849. Even though resistance is probably 1847, but support is 1829. Huge support too, by the way. That's big trend line support. Oops. Big trend line support through here. Just so you know, that's where my risk is. Okay. We're at the bottom end of our range. Whoa. Hey-oh. Look at crude. I'm not going to pull it up. I'm going to grab a drink of my coffee, but look at crude. Okay. Norwegian Krona. This thing, I've been really considering buying it, and I haven't bought it yet. But all I know is if we break through 1824.50, that's going to be a pretty severe breakdown. Okay, if we break below 824.50, I'm going to write it down as major. 824.50. Now resistance is 840 still. And I'll tell you guys, if there's a currency that I wouldn't mind playing to the long side right now against the dollar, is the Norwegian Krona. If it breaks, because man, if that breaks, that should be pretty damn good. This right here is a butterfly, though. Hold on, let me check something. Let me stop here for a second. Yes, perfect. I'm gonna try that again. Hold on. Bear with me. Bear with me. Oh, shoot. Damn it. It's not quite a butterfly pattern. But see where I'm getting at here. Okay. I'm trying to figure out, did I do that right? I think I did. Anyway, yeah. But anyway, you can see how big that support is. Okay, sorry. Let's go over to the Swedish Krona. I was just trying to see if that was really super valid. Okay, here's the Swedish Krona. Man, talk about a tight range. This thing is probably prepped for a breakout here. Right, you can see this how important the support is. We might be just 847.75. Let's just call it 844. This thing's prepped to break out. 8.44 is 8.477 4775. Oh, 4750. Okay. Is that what it is? Yeah, this thing's in breakout or possible. It's setting up for a breakout. Okay, your bias chart is done. Finished. Finito. Okay, we only have a few minutes. What do we got going on today? We have weekly unemployment claims. We have import prices.